Yeah. Okay. We're going to start right now. So welcome to another installment of Tivan's investor briefings. I think it might be our third or fourth even for the year. That's a function of how much we're getting done here and all of the news flow and new developments. This week was particularly big at Tivan with our pre-feasibility study for the Speewah Fluorite project on Tuesday, and also some really exciting and proud announcements today regarding HR, new people joining us in Darwin. It's for our company, it's a fantastic day. Everyone's really excited. It's been a year since we hired people. I think I alluded to it last time. So wonderful day today and wanted to share that as well. So just some housekeeping at the top as usual. This will run for, again, 45 minutes to an hour. I'd note that we're routinely getting about 100 people on these calls now. So we know there's a committed audience on a Friday night. And we also know that the replays are being really well watched. I think last time was over 1,000 views. And so I know people can watch this back at their leisure on the weekend, which is great. So it'll be content rich again today. Just a quick note on Q&A. We only got a handful of questions before 3 o'clock today. It's hard for us to adjust when we get late questions. Like we've got a flood of questions in the last hour, and we appreciate that, but it's hard to obviously put that into the flow of things. So we'll just address the ones that came in early, and next time around, if you really want to get those questions in, try to pop them in before the late afternoon ASX deadline. That would help our end. So that's it for housekeeping. The context today is obviously mainly on the PFS, and then some wraparound items at the end in terms of the company and the next couple of months as well. I'll certainly provide some guidance on that. So into the slides. One sec. All right, there we go. So as you know, we landed our PFS on Tuesday. This represents about 6 months, really intensive work, not just with inside of Tivan, but with our study partners. For context, there's about 50 or 60 people involved in a report like this, or our report at least, with such rich technical detail provided across a whole range of study partners, multiple disciplines, different parts of Australia, even overseas, in some instances on the fluorspar market. And so it's a huge amount of work to get through. We're really proud of the report. We know it's been really well received in the right places as well. I wanted to start just on the headlines. Obviously, the first thing people look for are the financial metrics. And I think people that have been following Tivan for 18 months or longer now would know my deep-held cynicism towards these sorts of reports from junior mining companies in Australia. I've been quite open about that. I think I said that loud and clear at the AGM. And I said as well, when Tivan came to this stage, that we'd want to produce a robust report. Now, what does robust mean? It means that you've got conservative assumptions, that you've done all of the technical work, and importantly, that you're being transparent about disclosing those assumptions. And in our case, providing an incredibly rich tapestry of disciplines and chapters which enable people to not just understand the project, but understand where it fits in to the industry that we're operating in, and indeed understand what is arguably the most important thing, which is how we're going to deliver this project, right? Now, my view is that this is the most deliverable project in the country by far. It's actually not close. Now, why do I say that? It is largely due to that first table and the assumptions that it's underpinned by. But the headlines are that this is a very low CapEx project within the critical minerals sector. It's highly unusual to find a project like this in the country. As you may know, rare earths probably can't get out of bed for less than $1.5 billion. No one's going to persuade me that you can build a vanadium project for less than probably $1 billion. And the big lithium projects are way up there as well. So here we are, less than 250 million in CapEx, which is fantastic. That de-risks it for all participants, including ourselves, including financiers, and including in terms of government facilitation. So we're starting with a very low CapEx project. Again, these numbers built up by tier one EPCM contractors and really well-regarded industry professionals providing that robustness. Like I've learned that myself. I think having tier one engineering firms is practically a prerequisite to having a good PFS. And we really want to emphasize the contribution that Lycopodium made, that SRK Consulting made in particular. And they were instrumental to building up both the CapEx and OpEx numbers. But the headline is low CapEx, high criticality. This project's really important for the country. It's absolutely unique. When we deliver it, it will represent Australia's first participation in the global semiconductor industry. Just think of that. Think of the semiconductor industry and everything which it underpins in modern society and everyday life. Australia is a bystander in that industry. Never before there's been a resources project which can act as a strategic feedstock to the global semiconductor industry. And this is what we have with this project. EV batteries as well, and so on and so forth, not to mention the structural scarcity of Fluorite that we narrated so extensively in the report, and which I'll come to in subsequent slides. So low CapEx, high criticality, fast project delivery timeframes. Now that's partly because it's Tivan. You know, we're operating at this velocity speed all the time. No one can work as fast as us. No one can work as hard as us. But it's also a reflection of the low technical risk in the project, which again relates to the low CapEx. But this is a relatively straightforward project to build from a technical perspective. There's very little technical risk in the flow sheet. We're basing a lot of our work on extensive test work that had happened previously, samples we've got, test work that we've kicked off. We're thereabouts on specs, higher, in fact, internally. And so we can, present this with high conviction at this stage. And we did so, obviously, over, I think, 130 pages. And so the headlines and the financial metrics to look for, again, low CapEx, well built up. If you're watching in January or February when we announced this project, I think I disclosed that scoping study had a CapEx of 65 to 85 million. And we knew that was ridiculous at the time. But we knew that there was a lot of buffer in the project from where commodity prices have evolved to. And again, we wanted to present at this point realistic numbers to the market. There's a healthy contingency built in, which is really important at this early stage. We presented these numbers on a post-tax basis. There's all sorts of games that get played in that when people present. We've assumed a discount rate of 8%, which is entirely appropriate for us. Why? Because typically the range in the discount rates in this sector is somewhere between 6 and 10%. We're in the middle of that. And that reflects, again, low CapEx and the fact that we're working with Japan, which no one else is. And so our weighted average cost of capital will be lower than other people for those reasons alone. I want to highlight the C1 costs. You can think of this as a loose way to think about project break-evens. The mid price for our main product, acid grade Fluorite, is around $630 at the moment. It's been around there for the past 3 months and quite steady. When you work in the impact of the critical minerals production tax incentive, and even if you don't, you can think of us as around $300 on a C1 basis. So that's a 50% operating margin. That's fantastic. Look around the country. It's almost impossible to find anything like that. And that underpins that really fantastic payback period as well, less than 3 years. So these are really robust numbers, really exciting numbers. I was confident as soon as we got into this in January that it would end up something like this. But going through all that engineering work, you learn a lot about the vulnerabilities, the way different costs get built up. There's thousands of line items in our project. And so it was fascinating to watch the estimating process and to see how these things come together, even for me. But I'm really proud of the work that everyone involved did and delighted that it came out this way. So it's a fantastic starting point for the project. And it is just a starting point, let me emphasize. So the second chart there, and why I put these two things together, is that I really want to emphasize what this project represents for Tivan. This is not the be-all and end-all of Tivan. This is a bootloader for us. This is the start of the company. We've now identified a fantastic pathway, executable, deliverable pathway to free cash flow. And free cash flow, I said this last call, That's true north. That is it for these companies. If you take a junior resources company, to free cash flow, you are in the promised land because you are off the circuit of dilution. You're off the circuit with the placement market. You are able then to pick your moments in terms of how you want to build the company next. And there will be other things for this company to do. Maybe that's vanadium. Maybe that's Sandover. Maybe we acquire something else. We've proven already in this past 18 months what a spectacular acquisition Speewah was. Think of it now. We paid $20 million for Speewah in shares, which were worth nothing at the time, and in cash, which was partly deferred. And we've already proven up this project to be worth at least $500 million pre-tax. That's an incredible outcome, validating that acquisition in this manner. And that's to say nothing of the vanadium as well. So spectacular acquisition. Imagine a couple of years' time, if Tivan did have these sorts of numbers flowing in, $50 to $100 million of free cash flow. Imagine what our management team and our incredible team would be able to do with that. And imagine the vista we have across Northern Australia, the Kimberley, all the way down to Alice. I think it's like 4 million square kilometers is our playground. Imagine how many opportunities we would have with our crack team and free cash flow. So this is the start. This is the start of the company. And you can see now what we saw at the start of the year. It's plain and obvious to anyone that's experienced in this. You can break these numbers down in any way which you want, but you'll see very clearly that this is a fantastically robust set of numbers and a clearly defined, rapid pathway to free cash flow for the company and for shareholders. So does it get better? Yes. Let me just turn the page here. There's three principal ways those numbers will improve. So 3 ways and 1 principal way. The principal way is the classic resource extension pathway. So you'll know that we really picked up a data room in January, which had a massive array of historical drill programs, and we had to consolidate all that data and then build up to a new JORC estimate, which we did in April. And then in May, we moved towards what's known as an exploration target. And we asked SRK to do that for us independently, to provide integrity to that estimate and to ensure that it was conservatively estimated. And so we know from the work that we've done ourselves over the 6 months and with SRK that there is an extensive resource expansion pathway ahead. Now, we've reported that as an exploration target of 1.9 to 3.9 million high-grade tons. So that's a big uplift from 8.6. In the middle estimate, you're at 12.6 on that basis. And so beyond that, though, lies more veins, more fluorite, more work for us to do. If you look at the PFS closely, you'll see a really extensive chapter on exploration. And Steve, our head geo, wrote that. But he was really looking to highlight to shareholders the opportunities that are out there, the greenfield opportunities that are out there beyond the historic drill campaigns. We don't, want to give precise guidance on how big we think this is, but you could double it and you wouldn't be talking out of turn, internally at Tivan. And if you think about what that would mean, for the project economics, it's quite profound. It's quite profound. We have 2 main choices. Can we extend the preliminary mine of life, currently 10.6 years, out towards 20 perhaps? Or do we transition to increase throughput and aim for somewhere in the middle? Increase throughput would increase efficiencies, would increase CapEx as well. And these are the sorts of discussions that we're having with our strategic alliance partner, Sumitomo Incorporation, so in Japan. So no judgment about that at this point in time, but fantastic to have options and amazing to think that we're sitting on a resource which is both scarce and at the moment still really in its infancy in terms of exploration. So we're very confident that the resource will expand significantly. There's hard-baked in metrics within the exploration target, but hopefully if you read the PFS carefully, you'll understand why internally at Tivan, we're even much more optimistic than what's reported in the formal exploration target. Beyond that, there's 2 other ways that you can enhance the project economics. The first is that there'll be some material which doesn't quite upgrade to 97% cutoff grade for fluorspar. And with that, we may be able to bolt on like a briquetting machine and create met spar out of that. And currently met spar is trading at a very, very high price in Asia. We're not really sure if that can persist because it is a lower grade product and it's not necessarily in demand for those new technology industries like semiconductors and EV batteries. So it's not as critical in our view, hence is why we want to obviously prioritize the acid grade fluorspar. But nonetheless, if we're able to add a very simple circuit and have a byproduct rather than sending things to the tailings dam, then that's something we're definitely going to look at. Most likely scope that up and cost that out in the next study phase. Not a very expensive step at all, and it would be a significant potential enhancement to revenue for the project. And then right at the end of the project, whether it's 10 years, 15 years, 20 years, it will really depend on the commodity price as much as anything. We will have built up a stockpile of tailings, which are mineralized. And it may be the case that because you've already mined that, you can put that back in as ROM and or with lower grade material, which is all around the site and prolong the mine life. Now, that wasn't our priority in the study to look at that. What you're trying to do is to get started and get started in the most efficient way possible. But fair to say many mines have done that, and in some cases very successfully, because commodity markets do change over that sort of horizon. So in presenting this PFS, please do think of that initial starting point in the financial metrics as just that. It's the starting point. There are really significant material, credible opportunities for this to get bigger and better, and that would provide optionality for Tivan and again, Sumitomo Corporation in joint venture to make good decisions based upon our expectations of how demand will evolve in offtake markets in Asia in the years ahead. So that's the second point. I won't dwell too much on the industry dynamics, but please have a read. We did spend a lot of time getting to know the fluorspar market intimately over the past 6 months. That involved industry intelligence firms, the two that we believe are the best in this space of benchmark minerals intelligence. Chart on the left there, Project Blue's got a great data set as well. And so we worked with both of those groups on that basis. We've learned a lot from Sumitomo Corporation through this period in our extensive ongoing daily dialogues on offtake markets and their vast experience, not just in the upstream component of sourcing materials like this, but their extensive experience in midstream and downstream. So we've learned a lot from our partners in Japan. So we have a very thorough understanding of how the market's operating and evolving, especially in Asia, which is really where this project is targeted. And the key message from both these charts is that there is this massive and very pronounced and very transparent and very predictable supply-demand imbalance, which is impending from about 2026 onwards. And it's a function of just that ongoing demand for new technologies, particularly for acid-grade fluorspar. And again, just think of these growth industries, EV batteries and semiconductors underpinned by AI, and then a very flat supply curve. There's very few projects coming on. We do actually believe Speewah will be the only major greenfield project in the Western Hemisphere this decade. It's incredible to say that, but that seems to be the facts. No King in South Africa was a major greenfield project. They got started in 2019. There's a couple of brownfield projects trying to relaunch. There's one in Canada. There's a couple in Europe, pretty small. Looking around the rest of the world, there's just no supply reaction. And what a contrast to lithium. When you had that big price spike in lithium, everyone all of a sudden had a lithium project. It's like 200 or something. And in fluorspar, we're it. And that's exactly what we are. We're it right now. So it's quite amazing. These project gaps and the supply-demand imbalances on the left, we've filled in with Tivan's production, just to highlight that out to 2030, even with our production, there's no way we can help hope to fill that gap ourselves. We're just a fraction of it. The way that Project Blue does their numbers is slightly different. So, they are assuming that some projects will come on in China or expand, and that's fine. So the project gap does actually match out with benchmarks numbers when you adjust for that. But you're talking about a supply-demand imbalance of around 1 million tonnes, and our production target is 140,000 tonnes. And we're not even here discussing the journey from 2030 to 2040, where that demand curve will continue to increase. And it is actually practically impossible to see where the supply is coming from in our deep dive of various resources and countries and industry participants. So there's a genuine structural shortage driven by new demand and by resource depletion. The rates at which these resources are being used is just incredible, including, even for Speewah. You could think of the world consuming 2 or 3 Speewahs a year, like the whole resources as it's currently defined, to give you a sense of the velocity of depletion. So when you get into this, and this is one of our challenges, I said this at the top, that education campaign around Fluorite. I think a lot of people, it's obscure at the moment. It's niche. It's our responsibility to keep explaining it to people in Australia. And to the extent that we've had that opportunity, people come at it from a lithium perspective. And it takes a while for the penny to drop. This is just so fundamentally different. Even on the CapEx side, we don't have to have these extra process steps like desliming and heavy media separation. This is why it's much cheaper for us. Added to which, in lithium, they're shipping a lot of dead rocks around. Lithium spodumene 6% concentrate, so you're shipping 94% dead rocks. That's expensive. Our product's 97% grade, so we've got no haulage costs. So it's a fundamentally different setup. The market outlook is incredibly bullish. The fundamentals are there, and we're just uniquely placed to deliver that value proposition, especially in Asian markets. This is really the point behind how we addressed, what is a really important question when you're designing a PFS, which is how you're going to forecast the price. Now, this is a necessary step in any PFS because you have to come up with a revenue line, and that compels you to think about the future. And this is where, again, a lot of PFSs fall down in Australia because they'll just ask a forecaster to print a number for them and they'll put a flat line out there. And in many cases, there's no connectivity between the numbers that they're saying and why it is the market actually might evolve to that point. In other words, they can't explain why their ambitious commodity price forecast should hold up. Now, in our case, we've done the opposite. This is not an ambitious commodity price forecast. And in some ways, it's not really a forecast. This is an empirical finding. So let me explain that. We've used that word in the title. All we've done here is basically take the long-standing time series, which happily for Fluorite date back to 1988. And we've taken the last 10 years and we've basically mathematically fitted a curve. And that's a very simple process with anyone with statistical experience. And from that, you can derive a trend. And a trend is an observable feature in nature or in time series in life. It's a real thing. And all we've said is that the trend will extend on at the same pace. And conservatively, we capped it. And we knew we were going to do this way back in April, May, when we were defining the JORC estimates, and because you have to assume revenue factors at that point. And for consistency, the way that we derive the cap for the PFS is exactly in line with the assumptions that we made when we defined both the mineral resource and the exploration target. So it's all wrapped in a very tight bow, which is important. So all we're saying here is the trend will extend. And the reason, in my view, this is a highly conservative assumption, is because that trend has been in place with the market in balance. The Fluorite market's been more or less in balance over that decade. And yet we saw in the previous slide that we're about to head into historic supply-demand imbalance. So the working assumption should be that the price would evolve above the trend. And we've not said that. We've just said it's going to extend. And then we've said we'll put a cap in, because if we let that trend extend over the project life, the numbers would have ballooned. And we could have done that if we wanted to. Most people probably would have, but Tivan's not most people. We want to be conservative in our assumptions, and we want to present robust numbers to market, which is why we approached it this way. And we were very meticulous in explaining all of the assumptions and providing fantastic transparency around the commodity price model, and importantly, using balance of payment statistics as well as a cross-validation source to see how demand and supply is evolving in the key product markets that we're targeting. So that's how we got to the revenue assumption. Our view is it's conservative, but another way to say it is that it's empirical and highly, highly transparent. Now, let me just touch on this because it is important, and it's probably one of the most novel inclusions in our PFS. When you get to that industry trends section in the PFS, most people just put out some supply demand. They'll talk about the energy transition, and that'll be it. We went to great lengths to pull apart the global balance of payment statistics in Fluorite. We know every country that's importing and exporting, in some cases down to the month, in many cases down to the port. It's an incredibly rich data set. It was set up by my former colleagues at Exante Data for us in New York. They've got some of the best trade statisticians in the world. So this is highly proprietary in terms of output, but it is all based on public statistics. It's just people don't know how to put them together, like my former colleagues. Now, I wanted this because I wanted to understand the markets, and I am circumspect about how reserves get reported in mining, for example, particularly in places like China and Mongolia, and there's so much dispersion around the quality of these resources and so on and so forth. Where you have high confidence in data sets is in the balance of payments. And that's because when you're exporting and importing a product, you have to cross customs, and that's hard. That's hard to do. You can misinvoice around the edges, but you'll get found out over time. So when you're talking about balance of payment statistics, these are some of the highest integrity data statistics you'll find in global industry. And so by going tremendously granular on this set of data, we're able to understand the market we're operating in, and we're able to understand the transition that China's been making. And if you look at these charts closely, they might take a little bit of time for people who haven't seen charts like this before. But this basically shows the evolution of China's imports of fluorite and exports of fluorite over the past 8 years. So this is really the window. Now look on the left, and you'll see 2024 tracking above historic highs. And you'll see the light green line, 2023. Where did that end at the end of last year? Historic highs. So what this shows very clearly is that China's year-on-year behavior, stripping out seasonality, is clearly demonstrating that they've moved to this structural importer of fluorspar, and that they're in a resource preservation mode. They don't want to keep depleting their limited resources at home, so they're turning to principally Mongolia at the moment. But through these actions, you can tell very, very clearly that they've shifted for a reason. Now you match that with the exports as well, and if you look closely there at 2024, it's tracking really low, and you'll see the collapse in imports if you look back through those time series very carefully. And we've aggregated those in the PFS if you want to look at different ways to visualize this dynamic. But essentially, China is ramping up their imports and they're collapsing their exports. And that is extremely high integrity data, showing you very clearly that China's has significant constraints, shall we say. Now, Benchmark's got some very aggressive forecasts on resource depletion with China. I think that's probably being too pessimistic when it comes to China's ability to find other sources, or if prices are higher, naturally they can mine other things. But it is very different than other critical minerals where China's got ample reserves. And of course, rare earths, which is sort of the poster child for much of the debates that are going on in the sector. China has incredible reserves of rare earths. And because of that, they're able to influence, shall we say, the price very, very heavily. In the case of fluorspar, no. As I've said before, they are shifting right now from the price maker, where they were dominant for 2 decades in fluorspar, to a price taker. And why? And how can I be so confident of that? It's because of these data, because you're seeing that they're having to go to market to import, and at the same time, they don't want to export because they're running out. And we can debate how long that's going to go for, how long it might take, but through their import-export behavior, you can be very, very confident that that trend that we've shown in the previous chart is going to hold up and extend, I believe. And who knows, if they take retrograde actives, like actually limiting resources, then the possibility of a disorderly spike higher in fluorspar is absolutely there. Okay, now this is where we sit. This is the classic bubble chart. I had quite a journey, can I say, building this chart. Part of the journey is with the ASX. The ASX, you know, and credit to the ASX for doing this. They have very strict rules around reporting of peer resources. And that's the way it should be, because there's a lot of games that can get played and do get played in this space. And in fact, they sent out a compliance update just in the middle of, the middle of last week, first time in 6 years, tightening the peer resource rules, right as we were about to publish. And so that was quite a journey. We were working with ASX for a couple of days on this chart, and especially on the data tables, which are way down deep in the pack. And they're very important for anyone who wants to go deep with us on this. And what we wanted to show here was that you need to visualize the peer resources in fluorspar across multiple parameters, really. It's helpful to see which time zones they're in, which geographies. And so obviously we're in Asia. You've got a couple of Mongolian resources there in blue. Over in the Americas, you've got the Canadian resource I was referring to, and then South Africa in yellow. And importantly, this particular chart, and this was the ASX directives, had to be cut off only with those resources that are reporting at JORC equivalent codes. So this is a high integrity data set. JORC standards, SAMREC standards, there's a Canadian standard. And here we're able to talk about what's inferred and what's indicated, and have conviction that these numbers are thereabouts. Now, it's not to say those resources are where they're shown in the bubble chart, right? Because, you know, look at Canada, for example. They haven't reported for 10 years, and they were mining for 6 or 7 of those. And now they're way underground. The mine's actually closed. That resource needs updating. And, you know, we didn't want to wade into picking every resource apart. So we simply put arrows to signify that that resource is in the process of depletion. And we used years. You can imagine if something's reported in 2021, then it's been depleting for 3 years. And by the time we get to market, which is 2027, those resources will have all moved to the left. Now, again, contrast Speewah. By 2027, we're going to be way, way to the right. We'll be off this chart. And so it's a really incredible resource within the global landscape that we have, because when you have a large resource, even if the grade's a bit lower than some of the ones shown here, it's still very high grade. This is cut off at 12.5%. There's resources well below that, but there's nothing else that we could find. And so with a very large resource, you get those economies of scale, you get that mine life, and you get those project economics, which help you raise the relevant capital. And so this is, you know, this is our tier 1 peer list. The data's been compiled meticulously. It's not to say there aren't other resources out there. That's disclosed in table 2. So, you know, some of the resources which don't report those high quality data points, they're all listed there. You can go through a lot of that. You'll see the famous big Mexican resource. And you'll note that it hasn't reported since 2008. If you look at the PFS closely, you'll see our concerns documented in terms of Mexico's lack of export growth in fluorspar. And we know why that is. It's because that resource is riddled with arsenic. And when you've got arsenic in your resource, you can't use it for the purposes that are in demand right now. And so we don't regard Mexico, you know, as a competitor as such. And then within Asia, noting that China's, you know, moving aggressively away from exports into imports, and you've got these, you know, a couple of Mongolian resources there's really no competition for us in this time zone. It is a profoundly unique opportunity that we have. And that is, you know, the full global landscape. Often when you see these bubble charts, you'll see them in lithium, and they'll pull together the Australian resources, right? And that's not great, because you're going to have lithium coming on in Bolivia and Argentina and other sorts of places, and China with lepidolite. This is it. This is the whole global landscape. And again, none of these projects, greenfield projects, are scheduled for 2020 to 30. Canada's brownfield, the rest of those are in operations. The one that starts with W, I'm not going to try to pronounce that at the top. That is a good resource. That's in South Africa. I believe that'll be the next greenfield project after us. And it's owned by the same company that owns Nokeng. And we can tell from the way Nokeng's operating that they're very professional. And we've always regarded Nokeng as our closest peer internally. So those South African resources, definitely in the mix. Canada, not so much. Mongolia is practically being nationalized by China, and China itself is depleting. So when you think about that Asian landscape, we are just in a unique and perfect position to supply the demand, which is so evidently there. And just to reinforce that, and I'll just keep pulling through here, the proximity is relevant. Australia has higher labor costs than Mexico, South Africa, Mongolia, China. That's just a fact. We put some numbers in the PFS to reinforce that. Whilst we have these fantastic operating margins versus other Australian critical minerals projects, we know that we're not the lowest cost producer right now. As those resources deplete, we will be getting there, though, because the cost curve will increase for other people as those resources effectively run out. But don't forget who we're selling to. We're selling through our strategic alliance partner, Sumitomo Corporation. We're targeting Asian markets specifically. And if you look at where those other projects are located, you have to consider shipping costs and logistic costs. It's a long way to get from South Africa to Japan, for example. Less so India. You know, I can see that. South Africa is exporting a little bit to India, and that's proximate in terms of how close we are to India. We still have an advantage, but it's not dramatic. But certainly if India has to, you know, go through the Straits of Malacca en route to China, South Africa to China, or to Japan or Korea, it's a long way. And then look at the distances from Mexico and Canada. They have to go through the Panama Canal. It's prohibitively expensive to get to Asia. And so, you know, we're sitting just in that unique position. We feel, you know, incredibly almost privileged to have this resource where it's located. It's actually fantastic that it's where it is, even within Australia, if you think about it, right at the north there with this port that's literally on the doorstep of Asia. So the fact that we'll have those low transit costs gives us more command over the prices we'll be able to set at the FOB Wyndham basis, which is ultimately the revenue the project will generate. So again, almost a category of one for us in terms of location, and a structural advantage. This is a forever competitive advantage that the resource has in terms of proximity to Asia. Now, shifting gears a little bit, and I'll be quite quick here. This is just an illustration of the point that I want to really emphasize in closing out this presentation about that deliverability of the project. I said on one of the last calls that it's well and good to have rocks in the ground. If you don't have access to finance, they're just going to stay that way. And I believe that will be the case for, frankly, most projects in the critical mineral sector in Australia for the foreseeable horizon. They cannot find a way to access finance. Now, the government is, to their credit, building pathways to support. You'll see that we put in the critical minerals production tax incentive into the economic model, and it does lower our C1 cost by about $15 per ton. So it's useful. Anything which reduces OPEX is very, very useful. But then you've got those classic funding bodies in terms of, you know, EFA, NAIF, and then we've got particular opportunities to push along with the infrastructure in the East Kimberley because of our location and the community support that we have. So this can pertain to the road and to our hydro initiative. And one of the most, frankly, exciting things that we learned in the past, particularly the past month, was just how viable the hydro is, even inclusive of the transmission corridor. You know, we've got costings back now, and it looks fantastic. It really does. If we can extend that mine life to about 15 years, it will pay for itself. Think of it this way: instead of paying for diesel or gas, we can pay for much cheaper and much more stable hydro energy, green wrapping the project, and the spread on OPEX is so significant that we can pay the transmission costs. And we're working on that already as an initiative. So we may indeed have the miracle of a truly green critical minerals project taking shape, or projects taking shape at the Speewah Valley over the next 5-10 years. And so all of those funding pathways are there. I won't dwell too much, but just suffice to say, we are way down the track on all of these paths, particularly for a project which just landed a PFS. And I think this is where Tivan's government relations and connections in places like Canberra and Perth really kick in, but especially Japan. And I won't spend too much time on today's call on the strategic alliance with Sumitomo Corporation, but just note that again, that announcement mentioned JOGMEC. I've been up there again in the interim. The relationship's fantastic. I think I used the word flourishing in the PFS. It is. We're working very closely on all aspects of the project each week. And part of the announcement was to say that, you know, Sumitomo's looking to maximize the government facilitation in Japan. So you could think of a JOGMEC, you could think of a JBIC, and in Australia, you know, we're looking to do the same and finding ways to bring together project financing, which is ultimately going to be very conducive for retaining the value of the equity in the project for both parties. So that's the landscape. I think you'll hear a lot more about the Speewah Fluorite project from government in the next couple of months, and certainly in the second half of the year, because now that we've achieved this big milestone, what that's done is unlocked a lot of the processes that we've been working on with government. Government typically needs that milestone achieved to be able to lean in heavily to a project. So we've done that now, and you'll see the results. People wondering what's next. Get ready, and you'll see how busy we've been behind the scenes working with governments, let me say. And then finally, and this is perhaps preempting some of the questions a little bit, I wanted to emphasize this point. And, you know, people that have been on the journey for the past 18 months, and indeed long-standing shareholders of TNG, there's this sort of persistent refrain around, wow, they're doing so well. It's an incredible corporate transformation. I think that's universally acknowledged that we've achieved that over the past 18 months. And yet the share price is sideways, shall we say. And sometimes I've pointed to, listen, the fact that every peer in our universe is down 80-90%. But I think the better way to frame this, and this is partly, you know, me communicating, particularly with the online forums, to help reframe, I think, some of the mindsets that I see very persistently there. Just run this thought experiment with me. Imagine that Tivan was indeed a new company, and we'd started it when I took control. And we started with what most new companies do in the junior mining sector, which is issuing 100 million shares. And we had $5 million in the bank. That was the bequest from TNG. And frankly, we had nothing else. That was it. I was dealing with, as I've said several times, an absolute train wreck at the start. And what have we done since? Well, we've taken those 100 million shares on issue, and we're at 123 million. That is negligible dilution over the horizon that we've been running the company for. Look around the sector. Again, anyone that gets close to a project is 1 billion shares more on issue. And here we are at 123 over 18 months. And that includes the acquisition of Speewah. And that's remarkable. you know. Again, just look around the sector and you'll see SOIs. And we don't get any credit for this because Tivan's SOI is actually 1.7 billion. But when you adjust for the mess that TNG left me, that's what you get. That's what you get. So have a think about that. I'd ask the online commentators to have a think about that, this adjusted metric, because that's the lived reality of Tivan. That's how brutally efficient we've been in 18 months. Minimal dilution, preserving all of that equity for the shareholders that suffered, and indeed creating real intrinsic value now to support that equity, bearing in mind that we took over a company that was finished. And sometimes even on the share price, you know, I think it's a bit much a little bit sometimes. Think of it from my perspective. That company was worth $5 million. That's what I took over, the cash in the bank. It's now worth 100. That's a 20x return. If you true this up, if you true this journey up, that's actually what I've achieved in leading this company. And I want to actually rephrase that, because it's not just been me. It's been an incredible team effort. But that is the fairest way to actually visualize the achievements of this company. And I hope this chart, sharing this chart and just opening that dialogue, helps reframe some of the debates. And I hope it also provides that sense to shareholders that this is not an accident. You know, this is a discipline, and this is what we've brought to the table. And this is persistent. You know, I'm a major shareholder at the company, and that alignment should give shareholders great comfort that all those decisions we're making on the capital structure of the company is firmly aligned to minimizing dilution and ultimately maximizing earnings per share. So you have to get those earnings, but en route to getting those earnings, you obviously want to minimize share issuance. So I think just the mere optics of the shares on issue that we inherited from the TNG era have completely obscured the achievements of Tivan. And that's why I wanted to put this chart in the pack tonight, just to reinforce that, but also to assure longstanding shareholders as well that this is a discipline. It's part of the DNA at Tivan to over-deliver and to almost substitute sweat equity for issuance. You know, the amount of things that we've achieved at this company and the team's achieved, it's really incredible over 18 months. And to reinforce that point, it was a celebratory day here because we're able to announce HR processes that we've been working on for many months, frankly. And we wanted to give the people joining the team that comfort that we were over this milestone, because it de-risks the company so much, and it provides that really clear intrinsic value that we knew was there, but until you publicize it, you know, you can't necessarily be sure. And so with the announcement on Tuesday, we proceeded to finalize these important HR announcements. So delighted that Ellen's joined us as head of Northern Australia in Darwin, and Michael's joining us as senior geo, also based in Darwin. It's super exciting for me. You know, I think everyone knows I grew up in the Territory. Ellen did too. And like true local, Michael's effectively a local. He's been all over the world. He's an incredible character, but he's been out at Granites, which is just this epic gold mine in the middle of the Tanami for several years. And he's got deep, you know, real fieldy experience. And, you know, think of what's ahead at Tivan. We've got two really significant drill programs, both at Speewah and at Sandover with our friends Earth AI. I'm back at Earth AI tonight, but this is muscular stuff. You know, this is where the drill bit hits the ground and real things start happening. And Steve's pulled a shift over the last year. We all have, but he's been working pretty much solo in that space and from Darwin by himself. So to have two new people joining in Darwin is really exciting, gives us that critical mass. And particularly with Ellen, Ellen's got, you know, tremendous standing in Darwin. She's really, really well known in the key networks of government and in industry up there, particularly around the development of the Middle Arm Sustainable Development Precinct. She's worked for chief ministers. She's hugely well respected in Darwin. It's probably one of the most important validations, I would say, that our young companies had particularly up north. You know, if you knew Darwin as well as I now do, to be able to attract someone of Ellen's standing and caliber, and to, I think, imagine a future where her contributions will be here durably. It's exciting. It's really exciting. So we're really thrilled to announce this today, and to be able to introduce new talented, values-aligned professionals into the team. And in no way does this detract from what the guys just did. The team that pulled that PFS together, it's a document that I think will be read in years to come. And it was an incredible journey, particularly over the most recent weeks, pulling it together. Military precision required under deadline pressure, and bringing together an enormous amount of multidisciplinary information into a beautiful document as well. And so, amazing job the core team has done at Tivan, and today's a wonderful day to welcome new colleagues as we plot towards future growth. And so that is the substance of the presentation. If you want to get into all things peer resources, these are the tables. If you want to get into the project more, then get a cup of tea, sit back and read 130 pages of a perfectly delivered PFS. It's all there if you take the time. And we're very, very proud of the document that we delivered. And again, a big thank you to our study partners and our project partners. LICO's been spectacular. SRK's been amazing. There's a lot of other people involved in what we did, and many local enterprises up in the Kimberley now leaning in hard. And that's part of the mission for us too. Really fantastic to get to know the local contractors, particularly many of the Indigenous owned businesses that have been over at Argyle Diamond Mine and other projects. So we're really excited that they're leaning in as hard as they can. And we do want to localize the build out of the project as much as possible. So that's the substance. Briefly on Q&A, as I said, this is just a handful of questions today. Sort of, I mean, there's always stuff online. We just picked the stuff from the inbox, one from online, but just to capture the flavor, I think, of what was on the online platforms a little bit this week. So I'll just pull together through very, very quickly here. The first one is probably the most persistent refrain, if I can say. Great report, well done. Why isn't the share price higher? So two things. The first is that, you know, from my experience trading, and that's extensive, I don't think anyone should view a PFS as a risk positive event. Most of the time, the company will puff up and leak what they pretend to release, and then the insiders will then dump the stock. Like, that's the classic profile, pump and dump. Now, we didn't leak, we never do that. We're extremely disciplined. But because there's that a sort of profile in the market, I can't remember stocks that pop on PFS ever. It's not really like that. What you're looking to do is not fail, because most companies do. And in fact, one of the most erudite comments that we received this week from one of our most sophisticated investors, shall I say, you know, we did obviously several follow-up calls this week with various institutions, and one of these calls went for about an hour, and 45 minutes at the top was just on the PFS, like ripping it apart. And right at the end of those 45 minutes, I was like, so what do you think? And the comment was revealing. It was like, Grant, like, this is a rare PFS. And they've seen hundreds. And they said, it's a rare PFS because we cannot identify a fatal flaw. And most of the time they can. Like, you know, in most cases, it's patently obvious where the flaws are, where things have been misrepresented, where things have been puffed up. And in our case, we took that as high praise. And that's the right mindset, you know? And so we're very happy with how it landed. And the second point here is that we're in the business here of building wealth, long-term wealth. And I know how to do that. I've done that. And part of that is not being knocked around by short-term metrics, and in keeping your eyes well down the pathway on the horizon and on what the most important things are to generate that wealth. And as I said at the top, that is free cash flow at this company. So free cash flow is true north. And we took a huge step towards that this week. If the share price goes up a couple of percent, down a couple of percent, frankly, I don't care. What I do know for sure is this company now has tremendous intrinsic value, and there's now, tangible evidence of that in this one project. There's going to be tangible evidence at other projects as well. And the company is now fundamentally de-risked because of that. Whether the market trusted me last year or not, there was nothing I could really point to as tangible as this. It's a fantastic document, and the fact that it's out there in the wild now for everyone to read again and again is tremendous. So I'm not in any way fazed by the market reaction. Again, the most important thing is you land it, and then typically for good PFSs, you'll get back in that grind and rally phase, and it will depend obviously on what we deliver in the second half, and there's much to look forward to. Second is the comment from Hank on the JV structure. I'm not going to mention, if you're looking at the slide, this ratio. I'm really not sure where that came from, and I want to be very clear here that at Tivan, we've never said, and we will not comment upon where we think the JV ratio will land with ourselves and with Japan. That's the big negotiation that's underway, and that we're looking to close, as soon as possible, and not later than the end of the year. I suspect if someone's throwing around 50-50 numbers, okay, so there I've said it, I suspect that might be because of Ardia and the fact that they did a 50-50 JV recently. And I guess that's the only reason. I'm not really sure where else it could have come from. That deal is very different because they've got a very, very big project, and they had to finance their pathway just to FID. And in doing so, they sold half the project, and they'll get to FID and they'll have to do more. Now, look at our setup. It's just so different. Again, we've got very low CapEx. We've got a very low cost runway to get to FID. We do not need to sell much of the project to close the project financing gap. And that's an unbelievable position to be in. And we've got, frankly, other people interested. I said this in the PFS as well. It's true. We've been approached by 2 other major multinational companies to join the JV. And we've politely declined out of respect to Sumitomo because they moved early and they asked for exclusivity. And a deal is a deal. On top of which, we love Sumitomo. The value alignment we have with Sumitomo Corporation is profound, and it runs deep, and we're very confident that it will endure. And so we're sitting pretty. It's a big negotiation. It'll run through the second half of the year. It's my main priority, but it's very loose to be throwing around numbers like that online. It certainly hasn't come from us, and you certainly won't be hearing from us. I think the other thing to say here is that look at what we're looking to do. The conceptual point that Hank is trying to make is correct. We will not own 100% of the earnings of the project. Of course not. That's what a JV is about. But what we will be doing is avoiding the dilution that other companies endure en route to a project. That's the whole point. And so again, thinking about the valuation of the company on an earnings per share basis and getting free cash flow, that's the aim. And because we've got such a fantastic project, we believe we can do that. And that will be the journey through the second half of the year. And so thanks for the comment, but it needs to be framed more appropriately. And this is what we're working on in terms of delivering it in the second half of the year. In terms of a takeover, I know there's been a little bit of that online this week. All I would say at this point is that, we're aware now that because we've defined such a fantastic project and because it is unique, that it is quite possible that someone runs the ruler over it. All I would say is that if that were to happen, the board would take their fiduciary responsibilities very seriously and review it, and most likely get independent advice and then make a determination at a board level. It's premature to speculate on that sort of thing, but suffice to say, with the board that we have, there would be absolute probity, and there would be a fiduciary process where the board would sit back and prioritize its duties to act in the best interest of the company. And so finally, long-term investors participating in share purchase plans, fair to say that we are aware that we haven't done an SPP for a year. I think I mentioned this last time that we won't be able to do one anytime soon because of the suspension back in Feb. That means that the ASIC relief that's afforded restarts a new 1-year clock. Okay, so we are aware of that, and we are looking always to promote and support retail engagement in the stock. I think if we do negotiate to a successful conclusion with Japan in the second half of the year, and we minimize that dilution, as I showed in one of those charts, this could be just this miracle story where Tivan emerges with a project and free cash flow, and yet with retail being the predominant cohort on the registry. Because again, the typical life cycle of these companies is you go from retail, you have some success, you get on the project development pathway, you sell everything to the instos to raise the money, and then the instos short your stock, and then off you go. What we're trying to actually do here is keep retail up at that 70, 75%. We could have a project, I reckon, and retail will be absolutely a predominant cohort if we manage to structure the JV appropriately. So it's an exciting time. Don't think that we're not looking out for retail. I'm here again, 4th time for the year. This is largely a retail call, I'm sure. And we'll do everything we can to continue to promote retail engagement and alignment with the stock. So that's it. I think I've hit the hour mark. I know people will watch it back over the weekend. The key messages from us tonight are we've delivered a robust PFS. It's just the start of the project in terms of resource definition. The principal aim of the project is to take advantage of its core attributes, being low CapEx, high criticality, fast deliverable timeframes, strong stakeholder support, low technical risk. And the aim of that project as well is to get Tivan to free cash flow. You've got your timeframes now. It's up to us to live up to it, but that's what's ahead for shareholders of the company. Delighted to welcome new team members today, them showing confidence in us and real validation of the journey that we've been on. Really glad that they're jumping in at these pivotal moments so they can come on the journey with us. And for all of you, again, just thank you for being part of Tivan. You own the company. We're really grateful for the engagement, and get ready. Sometimes as well with PFS, it's like, oh, that's it. No, not at Tivan. It's going to be a really exciting 3rd quarter. There's lots of things coming your way. So I'll leave it there. Have a great weekend. Thanks.